How billionaires use shell companies to pay $0 in taxes. Have you ever wondered how some billionaires manage to pay no taxes at all, while ordinary people pay a big portion of their income every year? It sounds unfair, and it is. Yet, it happens legally, and one of the main tools behind this trick is something called a shell company. Today, we'll dive deep into how the ultra-rich use these hidden financial structures to protect, move, and sometimes conceal their money, all while paying next to nothing in taxes. Let's start with the basics. A shell company is a business that exists only on paper. It has a name, an address, and maybe a website, but no employees, no offices, and no real products or services. Think of it as an empty financial container that can hold assets like real estate, stocks, or intellectual property. Now, not all shell companies are illegal. Many are used for legitimate reasons, such as merging with another company, protecting privacy, or managing investments. But in the hands of billionaires and large corporations, these entities often serve a different purpose: reducing or avoiding taxes. So how does that work? Let's break it down step by step. Step 1. Setting up in a tax haven. Billionaires don't usually register their shell companies in their home country. Instead, they pick tax havens, countries or territories known for having extremely low or zero corporate taxes. Some popular examples include the Cayman Islands, Bermuda, Panama, Luxembourg, the British Virgin Islands, and even small European states like Monaco or Liechtenstein. These places make it easy to register a company with minimal paperwork, low fees, and most importantly, strict financial secrecy laws. In many cases, the real owner's identity is hidden, making it almost impossible for foreign governments to track the money. And step 2, transferring assets. Once the shell company is set up, the billionaire transfers assets or profits to it. This could include ownership of patents or trademarks, profits from international sales, real estate investments, stocks and bonds, or even digital assets like cryptocurrencies. Here's the trick. By shifting ownership on paper, the billionaire can claim that the money belongs to the shell company, not to them personally. For example, let's say a tech billionaire based in the US earns millions in software royalties. Instead of collecting that money directly, they transfer the ownership of their software to a shell company in Bermuda. Now, when people buy the software, the payments go to the Bermuda company, not the US one. And since Bermuda doesn't tax corporate profits, the billionaire owes nothing in taxes there. Step 3. Claiming expenses and avoiding repatriation. Another powerful trick involves creating fake expenses, or intra-company payments. The billionaire's main company, the one based in a high-tax country, pays huge fees or royalties to their shell company for using its assets. On paper, this looks like a legitimate business transaction. But in reality, it's just money being moved between two entities owned by the same person. The result? The main company shows lower profits, so it pays less tax, while the shell company collects those payments in a country with no taxes at all. To make things even more complex, billionaires often keep their profits offshore. By not bringing the money back, repatriating it, to their home country, they can delay or completely avoid paying local taxes. Step 4. Hiding behind layers. To make tracing harder, billionaires don't stop at one shell company. They create multiple layers of ownership, where one shell company owns another, and that one owns another, sometimes across several countries. This creates a maze of paperwork, so complex that even professional investigators struggle to uncover the real trail. For example, Company A in Panama owns Company B in the British Virgin Islands. Company B owns Company C in Luxembourg. Company C owns a mansion in London. By the time authorities try to trace the ownership, they hit privacy laws, false directors, and legal dead ends. Insane. Step 5. Legal, but questionable. Here's the most surprising part. Much of this is technically legal. Billionaires aren't always breaking the law. They're exploiting loopholes that exist in international tax systems. They hire elite accountants and lawyers whose sole job is to find ways to minimize taxes within the boundaries of the law. It's called tax avoidance, not by tax evasion. Als tax avoidance equals legal manipulation of the system. Tax evasion, illegal hiding or falsifying of income. The difference is often just a few lines of fine print, but it makes all the difference between clever accounting and criminal behavior. Step 6. The real-world impact. While these tactics save billions for the ultra-rich, they have massive consequences for the rest of society. When billionaires and corporations don't pay their fair share, governments collect less revenue. That means fewer funds for schools, hospitals, public safety, and infrastructure. Ordinary citizens end up carrying a heavier tax burden, while the wealthy enjoy luxurious lifestyles shielded by shell companies. According to global watchdogs, trillions of dollars are hidden offshore, money that could have been used for public good. Reports like the Panama Papers and Pandora Papers have revealed how politicians, celebrities, and business tycoons worldwide use shell companies to dodge taxes and hide wealth. By example, the Cayman Islands strategy. Imagine a billionaire named Alex. Alex owns a multinational fashion brand that sells clothes worldwide. 1. Alex creates a shell company in the Cayman Islands, where corporate taxes are 0. 2. The Cayman company owns all the brand's trademarks. 3. Every time the brand sells a product, the main company in the US must pay royalties to the Cayman company for using the brand name. 4. These royalty payments reduce the US company's profits, so it pays less US tax. 5. The Cayman company collects the money tax-free. It's simple, clever, and perfectly legal, but ethically, it's a gray area. Step 7. Governments fight back. Some governments have started to close these loopholes. International agreements like the OECD's Global Minimum Tax Plan aim to ensure that large corporations pay at least a 15% tax rate, no matter where they operate. But enforcement remains difficult. With global finance more interconnected than ever, money moves faster than laws can catch up. In summary, shell companies are powerful financial tools. On the surface, they look harmless, just empty companies with no real business. But when used strategically, they allow billionaires to move money across borders, hide assets, and reduce taxes to virtually 0. The system may be legal, but it exposes a serious flaw in global finance, one that favors the wealthy and disadvantages the average taxpayer. The next time you read about a billionaire paying no income tax, remember, it's not magic. It's structure, secrecy, and strategy. If you found this deep dive eye-opening, hit the like button, share this video, and subscribe for more breakdowns on how the financial elite shape the world's money system. Because the more you understand, the less you can be fooled by the system that was designed to protect the few, not the many.